Hi there, please note that these videos are for educational purposes only and not to be taken for advice. If you need to know more, please visit our website at www.esttrader.com. Please also note that trading in general is very risky and that if you can't afford to lose, then please don't trade. Past performance is indicative of future results. So if you want to be an effective trader and you want to be more consistent, you want to practice, one of the best ways of practicing is actually putting real trades, or you put in part of your journal in terms of the price, the time. And one of the most challenging part when it comes to trading is simply the uncertainty of what the future holds. And this is something that we don't know, right? And then the only thing that we could do is to create the probability based whether if the price is going to go up, down, or sideways. And note, mathematically, you're already 33% up when that basically happens. If you're creating a probability and you're already 33% up, even before you even placing a trade, all you have to do is to find the 66% on top of the 33% to create 100% probability. So the question now is, what is that 66%? Well, depending on your trading style, your methodology, here at EST Trade, we'll discuss about price in general, and we look at the macro fundamentals of things to create more of the probability where the price is going to go up, depending on which futures price or which currency that we're going to trade. And we need to find enough evidence on why we have to enter. So we just, I personally just don't go in for the sake of going in. At the end of the day, is simply how can you be a professional gambler without you gambling and just using your own perception based on subjectivity in terms of whether you're going to be buying or selling. At the end of the day, part of the decision-making process is that you're still going to make a choice whether if you're going to buy or sell. That then increases in your probability from 33% to 50%, and just finding that extra 50% to make it 100% probability. The closer it is to 100% probability, the more certainty you're going to get, the more security that you're going to feel. And then through there is simply just the trade management and also having values of honesty within oneself, that if you are okay to risk that X amount of money, then put in the trade. Other than that, if you're not going to be honest that you're going to lose that X amount of money, then don't trade. Trading takes time in terms of success. It also takes a lot of risks, a calculated risk, basically in general, when you're entering a trade. So some of the best tools that I could recommend in terms of practicing would be something like, say, yesterday, August 12, we were bearish. So right now, August 13, it is up. However, at the same time, we're going to be holding, or our person will be holding the position. Why? Because there's a divergence between price and volume itself. When there's divergence, the odds and probability that it could correct is more than likely to happen. So shorter term will be bearish. Of course, longer term, the trend is still basically an uptrend, very strong uptrend. You can go against the trend. So I'm going to go through with you in terms of some of the exercises that we did yesterday and see how it all panned out. I know that some of the positions basically have been closed. So I'll start first with the Aussie against the US dollar. Yesterday, based on 1 hour, we all stated that we're all going to buy. Right now, from the 1 hour time frame, and when we were in yesterday, right here, got in around 73.35, 73.36. So we're basically up 40 pips at that point, currently right at this point in time. Based on the 4 hours, we are also at a buy, and look at that, we're basically, and the end result is we were correct based on our forecast. Mind you, that part of the forecasting, we tied it down based on gold, where we were bullish. We tied it down with copper, which were also bullish. And looking at daily time frame here, we're also bullish with copper. See right there. And then also the dollar index, where we were bearish with the dollar index. And one of the team members basically was bullish. but basically he is more bullish longer term, but we were very short term. Okay, so that's where we're tying down things to. So this was with the Aussie against the US dollar. Everybody was a buy based on the daily time frame, and 4 hours was also a buy, and 1 hour also basically was a buy. So what was the end result? The end result was correct, was positive basically from there. So second, if we look at the euro against the US dollar, we were buys since simply 3 days ago. And August 12th, we held a position. Yesterday, August, depending on the time frame here, 4 hours, we basically decided as well to add into the position at 1730, and currently now where we're there is 1798. So this was our major trade actually. So target point 1755, 1785, 1810. Close position at 785, and some pretty close at 1790, and now we're just waiting for the next one, which is 118.10. Pound against the US dollar. We were, since August 10th, simply we were in the sell position. August 11, we were a buy based on the methodology, and simply that basically won. August 12th basically was a hold based on the buy position, and longer term we are basically still a sell with the position. 1 hour we're basically a buy, 1% was basically was a hold. Okay, so hence this proves to show once again in terms of different perspective, in terms of looking at the markets, we always had to have some form of subjectivity, unless you have an EA or an AI that is basically programmed, or a computer will see things the way they are. But other than that, as long as a human being, you're always going to have some form of subjectivity. And this is what I love about trading. But of course, when I'm teaching, I want to teach things objectively as much as possible so everybody can see in terms of the way how we see things, and everybody should see the same thing. And we do these type of exercises. And this is why I love teaching so much, because someone will say we'll buy, someone will say we'll sell, someone will say we'll hold. Like you can see here, there's a buy, there's a sell, there's a hold. Will everybody make money? Absolutely, depending on the time frame, depending on the strategy. And there's no right or wrong, in my opinion, with trading. Anyone can make money in any time frame as long as you have a good trading strategy. Of course, but if you're dealing with a certain time frame and someone was seeing certain things, then everybody should see the same thing. Other than that, if they're not everybody's seeing the same thing, then you have basically a problem right there. So, but how can you eliminate subjectivity? By eliminating subjectivity is by going through and practicing looking things the way they are, and being aware of your thoughts, that you are not trading based on your own perception, and seeing things the way they are. And if you make a mistake, cut the ego aside, close the position, and go to the opposite direction of where the market is going. At the end of the day, the market is always going to be right. It's not going to be you. It's not going to be me. The market will always do its thing. Remember, we are always in a relationship with the markets, but the markets, when I say the markets, institutions in general, the big players don't know that they are in relationship with you, and they will do whatever they want to do. And hence you cannot be attached with your own trades and get rid of expectation. Once you're in an expected state of mind, and that's where regret basically happens, not just regret, sadness, fear, the whole negative spectrum of emotions will kick in because of expectation. And then you're having too much pressure to yourself because you want to be perfect, you want to be right. At the end of the day, there's no such thing, because the market is just basically the market. So if you detach yourself from that state of mind, then you'll be more objective, seeing things the way they are with no judgment. Right, so then I'm gonna move forward with the Kiwi. So yesterday, we're all basically a sell. However, it's too expensive, so we were waiting for a better price point, and hence now that the price went up, then we would be able to get a better price for a sell position. Because 4 hours and 1 hour, like here 8 to 12, 1 hour, we're actually a buy on the short term. So if you can see through here, we were buy and target point is 73.30, which got basically taken, got closed out in terms of the exercise itself. All right, it just took time in order for the price to manifest itself. That's why talking about manifestation, you also need a lot of patience for the price to manifest itself. So if you're the type of person who is impatient, then you're going to have to struggle a little bit, right? You need to control that emotion from the impatience to patience. So if you don't know the personality profile, I would recommend to watch one of the videos. So basically, it was a webinar that I did a couple of days ago in how to determine your personality profile. Very important. And if you need to know more, by the way, in terms of good trading methodology, the way how we do things, email us at esttraders@gmail.com. And feel free to come into our classes, have a look at it. If you like it, stay. If not, then it's okay too. All right, so next one is the dollar CAD. Dollar CAD, we are still simply in a buy position here because of the trend. So we're still holding 4 hours and 1 hour, same thing. We're also basically in the buy. Currently, it is just stabilizing itself. So it's really important to have this type of exercise if you want to be a better trader. This type of exercise is really a good way of looking at it. Mind you, though, it's a daily time frame, so it takes the next day 24 hours to do so. However, can you practice on a 1 minute by 1 minute basis? Absolutely. If you know price, if you can read charts objectively, it doesn't matter what time frame you're going to do the same thing, or the same rule applies. The only thing that doesn't apply is multiple time frame analysis, and it takes time in order to master multiple time frame analysis. So it's more of an advanced type of trading learning environment, and hence personally, I need to teach first the basics from the beginner perspective, or intermediate and advanced. And advanced would be more multiple time frame analysis, which is very, very important in trading, especially if you are a day trader or you are more of a short-term type of trader. You need to know multiple time frame analysis. All right, so dollar Swiss, we are all basically a sell and holding based on positions from August 11th, August 12th. Yesterday we were held, and this is where the markets, or the price of the dollar against the Swiss franc, is actually now depleting, approaching actually T1 through there. Last but not least, dollar yen. So we were short. Our forecast is to sell, and simply hold from August 11th. Basically on the sell position. All target points actually have been taken and is currently closed at this point in time. So by doing so, I also would recommend to put in those trades in a live environment. And the reason why I say that is very important to put everything in real time. If you want to practice, put in a small position, but if not, if you don't put a small position, and if you don't want to put in a live trade, put in your notes, then find that inner confidence within you to put in a trade. Why? Because the subconscious always knows what's real and what's not real. It knows when it's not a real account. It knows when it is a real account. When it's a real account, there's more hesitation is going to be involved. So more of the emotional spectrum from a positive to negative to positive will be put in place. All right, so that is simply my share with you for today, in how to be more an effective practitioner in terms of trading. What can you do to be more consistent through practice? I would definitely recommend for you to have a journal practice on a day-to-day basis, because you don't know what tomorrow will hold. And then if it's a loss, who cares? Then at least you can learn something from it. Never think that losing is got to do something about you, that you're a loser, or that you're not worthy of it. Remember, it's just an internal component. It's part of your limiting belief system. And if you need to know more, please, I would recommend as well to do our trading psychology course, which in my opinion is very, very important. Even before you get into a trading system, is to do a trading psychology, so you'll know the 6 inches between your ears. All right, so please make sure to subscribe and click the link below if you love this type of videos. At the same time, thank you so for watching. Keep trading, keep practicing, keep being awesome. Take care until next time. Happy trading. Bye now.